if I was starting from a naked chart, the first thing I would do is, I'm a visual person. So I need to see my trend lines at all time, because I know when price hit a trend line, something major is happening on a higher time frame that I'm not going to be able to see when I'm on a smaller time frame. So in order for me to not always have to try to remember what's happening on a larger time frame, I keep my visuals there. It's less things to think about when I wake up at 9 o'clock and the market opens 30 minutes and I don't have time to be scrambling trying to figure out what's happening and things of that sort. So I'm going to identify my trends on the higher time frame. This is if I'm starting from a completely new chart. I don't have to do this every day. Once I do it, it is done. I'm zooming in because I see price is still haven't made a lower a low lower than this. So I'm following the market. Cool. Go down to the daily. Let's see if it's respecting on the daily. It is. So let's say it's the morning of and I want to take a trade today, right? As I can see, price hasn't pushed past this high since October. I need to identify that because there's a potential that price will break higher or it won't ever come there and will break lower. So I need to identify that. I see price never even came back up here. I need to identify that. Literally, I'm just following the trend. You only have to do this once. You won't have to do it again until price breaks out. Once it breaks out, you just adjust your line. So if price broke out today and hit here, I would just, the next day, I will move my line here. That's it. So, I'll put this back. Okay, so we're on the daily. The first thing I see is I only care about the candle that I'm going to trade in. I'm not all of these days already happened. I'm not trading in there. I want to catch something within this candle. It is 12 p.m. so the day already happened, but I do see that this is a bullish day. Price has been going up today. Cool. I also see there has been some resistance. So I do want to mark my support and resistance line just so I can keep that in mind. So we have some resistance here. Resistance is just where price started, consolidating, moving sideways. That'll let me know when price gets to this point, there could be some rejection. So and then we also have some right here. Oops. I don't get why I just don't stay on the last thing I used, but hey, you got to work with what you got. All right, cool. So I do see price found some resistance up here and some support down here. Now let's go into our 4 hour. As you go down through your top down analysis, all you're getting is more information on what happened on that one candle. Okay, so price came up to the trend line, bounced, found some resistance, and I can edit this now that I got some more information. It's really like right here. So it found some support, bounced up. I would even say there's some resistance right here. Found some resistance right here. This is where price was struggling. I'm just identifying it to let myself know, hey, price could struggle right here again. So price hit the trend line, came down, found some support, came up, found some resistance. Seller stepped in, came all the way back down to this trend line. I can make it more accurate now. Hit the trend line, bounced up, came back, retested this support level, and it took off, really. It took off and went through this resistance. And And now it's headed to this trend line. So at this trend line, it could either bounce back down or break. So let's keep moving into the 1 hour. Okay, cool. More information. So price was at the trend line. It came down, was working its way down, working its way down, working its way down, found some support. I would say like right here. Found some support, bounced up. So buyers stepped in right here, brought price all the way back up to this, I would say like this resistance area right here. Then sellers stepped in, brought price all the way back down to this trend line. Buyers stepped in, brought price back up. Sellers stepped in, brought price back down. They tested this support one more time. Buyers stepped in, and buyers have been having control since it looks like 1 a.m., 3 a.m. this morning. So that's telling us that we could go for buys. But remember, we do have this trend line right here. So that means sellers are sitting in this area. Will they keep control? We don't know. All we can do is trade what we see, not what we think. All right, so now let's go down to the 30-minute. Again, price came down to this trend line. Buyers stepped in. Sellers stepped in right here. And let me put a line there because there are some sellers right here. I would say like right here is fine. What is happening? Sorry. Okay, there are some sellers right here. So sellers stepped in. Sellers had stepped in, retested this support. Then the buyers stepped in. The seller tried one more time. They weren't able to push price any lower. See, remember our trend? Up, so low, high, higher low, because it's higher than this low. Higher low, higher high, broke that structure. Higher low. Are we seeing it? This is clear as day. Now let's go down to the 15 because we can see it even more. So we have a low, we have a high, we have a higher low because it didn't get any lower. That lets us know the buyers are in control. We have a higher high, broke the structure. Higher high, higher low because the price couldn't get past this point, so it's a higher low. Higher high, broke the structure again. So now let's focus on where price is currently going. Let's even use this for example, right? This was a previous high. Let's mark it. This was a previous high. If we were using our system and process for supply and demand, the first step is, I'm going to write it out again. So this is supply and demand. The first step is find the trend. Second step is break of structure. Third step is tap the zone. And then the fourth step, is enter the trade. Okay. This is our process. This is what we're following. So far we have identified the trend. It's an uptrend because, again, we have a high, we have a low, we have a high, we have a higher low. Price never came back down here to create a lower low. It created a higher low. That lets us know buyers is in control. So now we would wait for price to break this structure. This candle broke this structure because it created a high higher than this. Price pushed higher than this previous high. That lets us know buyers are in control. Once we have our breaker structure, we look for the previous candle of the opposite color, and that is our zone. Price pushed out of this zone. So we would make this whole candle our zone, and for cosmetic purposes, we'll make sure we get the wick of the previous candle, right? This is our zone. Now we wait for the top of the zone. So price is playing out, price is playing out, price is playing out, tap. We finally got a tap. At this point, we identify what type of trader we are. Now you should know this before you even start trading. Are you an aggressive trader? I'll type this out too. So type of trader. This will let you know how you will be entering the trade. Type of trader. So you could be person A, which is aggressive trader. Aggressive trader is someone that's getting in on the tap. This is more high risk, high reward. You have to be willing to sit through the pullbacks and everything. It's a high risk, but it's also a high reward, right? Then we have a conservative trader. This person waits for the close of the candle outside of the zone or momentum coming out the zone. All right. Then we have a safe trader. This person waits for the next candle to push above the previous momentum candle close. All right. Now, I won't be able to show it if it doesn't, because you're not going to get it every time. Sometimes you have to be aggressive. Sometimes you could be conservative, and sometimes you could be safe. It's not going to be the same every time. That's why you have to know which type of trader you're going to be quickly. It has to be a quick type of mindset, what would you call it? Decision. It got to be a quick decision. So let me clean this up because that looks crazy. That should look better. Okay, cool. So type of trader. So let's go back. We have our previous high. We waited for the breaker structure. Candle broke the structure. We found our zone. We waited for the tap. This is the tap. So if this candle was playing out for this trade, you would have to been an aggressive trader, because you see the candle came here and it came right back out and it closed up here. I wouldn't have entered this trade conservatively, because look at how far away I am from my zone. You want to get into the trade as close to your zone as possible. Now, are there trades where you can get in conservative and still catch something? Yes, obviously it's still played out. But normally you want to get in as close to the zone as possible. So this type of trade is more aggressive. And I'm going to tell you why you could consider going aggressive with this type of trade, because we have some confluences. We're at a resistance level right here. That lets us know if price is pushing up. If price is pushing up from this resistance level, that tells me the buyers are having control. If price pushed down and closed below this level, that means sellers are in control. Like, sellers do not want price to go any higher. That's not what happened. Price pushed up. So as an aggressive trader, I would have got in at the tap. going long. So if it tapped, I get in. This would have been my 1-to-1. My stop loss is the whole zone. My 1-to-1, which is right here, I would have got out the trade right here. That would have been an aggressive trade, right? A conservative trade is waiting for the candle to close outside of the zone or momentum coming out of the zone. That's also another thing. You could have been conservative because you see the momentum increasing. You could have been like, oh, it tapped, but the buyers are like pushing the candle outside of the zone. You could have gotten like that. Will it always work out? No. But you could have gotten like that if you saw the tap and then momentum pushing up. You could have gotten right here. Again, your stop loss would have been the zone if your account can hold it, or if your account can't, your stop loss would have been this candle low, and then you would make it a 1-to-1. You could really make it whatever you want, but you would usually minimum go for a 1-to-1. Another way you could have been a conservative trader is you saw this candle closed and this candle opened right here. It came down, but it continued pushing back up. As soon as this candle closed, pushed down and pushed up, either way, you could have got in right here when the candle opened, could have got in right here. You like anywhere you could have got in. So let's say we got in where this candle opened. Our stop loss, because for the sake of not wanting to lose this much, that is a lot, I would have done the previous candle low, and then I would have made it a 1-to-1. So like somewhere right here, which is crazy because we have a resistance level right here. So that makes sense. Again, this would have been the trade as a conservative. If we wanted to play it so safe, we would wait for this so this candle opened here and closed here. So we would wait for this next candle to push above this high. So how would that look? That's way too far for me. It's safe, but it's way too far for me. So again, this would be my stop loss, previous candle low, and then my 1-to-1 would have been right there. Whatever. Still would have won that trade. So many different ways you could have won that trade as an aggressive, conservative, and safe trader. Will it always work out like this? No. Sometimes it won't push this high. Sometimes it only push for a 1-to-1. You never know. But as long as you go for the 1-to-1, you're good. So again, if you wanted to do aggressive, you would have got in on the tap. Your stop loss would have been this zone, which as you can see, you would be barely in drawdown. It never came back here. So you would have been barely in drawdown, and you could have just let it run up. Secured your 1-to-1, leave a runner. Let's say you thought it would have went to this resistance. That's almost a 1-to-2. Let's say you think it's going to go up here. You will still be in this trade. If you want to take it to the trend line, you will still be in this trade. This would be technically a 1-to-3 or a 1-to-4. That's how that looks. That's exactly, this is the supply and demand process. It's literally that simple. So again, we found the trend. We said, hey, price is pushing up. We have a high. We're waiting for the break of structure. This candle broke the structure, created a zone for us. We waited. And remember, these are 5-minute or 15. Oh, we did this on the 15. I'm so sorry. I didn't even realize. Okay, well, this is how it would have played out on the 15. Let's go down to the 5. Let's see how it would have played out on the 5-minute. I didn't even realize. I'm sorry. Hold on. Because I want this to be accurate. I mean, that is accurate. You could do it on the 15. You could do it on the 5. You could do it on 30. You could do it on 1 hour. This process works on any of the time frames. So, I mean, that was a good example. But let's see it on the 5. All right. Let me get my notes. Where'd it go? Okay, this is here. This is here. Okay, cool. Let's see what happened. Whoops. Come on now. I'm just trying to get this stuff out of the way. All right. So, again, we have this high, right? We have to wait till price breaks this high. It broke this high. It created a zone. So on this 5 minute time frame, price never came back to get us. On the 5 minute, price never came back to get us. So this would have only worked out on the 15 minute. And that happens sometimes. But if you're doing your top down analysis, you're going from the daily down to the 4 hour, the 1 hour, the 30 minute to the 15, we could have identified like on the 15, like, okay, we have a nice zone right here. So then on the 15, we would identify our zone like this because it looks cleaner, right? And then on a 5, it would have looked like this. So even still, we could have used it as a confirmation, like, okay, we got the tap on the 15. Are we going to get the tap on the 5? We didn't. So we would have to enter on the 15. Does that make sense? I hope that makes sense. Price did not come all the way in the zone, but it did tap the 15-minute zone. That still could have been an entry. So I'm going to leave it like that. So this is the 15. This is a demand zone because price is buying out of it. A supply zone will be at the top because price is selling out of it. So this is a, what did I say this was? Yeah, this is a 15-minute demand zone. And then this is a 5-minute demand zone. Sometimes price will come all the way down to the 5. Sometimes it won't. Sorry. I'm such a perfectionist. It's sick. Okay. So we have the 15-minute demand zone, and then we have a 5-minute demand zone. And as you can see, we got it on the 15, and we could have entered it while looking at the 5-minute chart because we see price came down, started pushing back up. Once we got that momentum, we could have been like, oh, I want to enter this trade because we're getting momentum pushing up. So let's say we got in right here because we saw the momentum. The zone could have been to the 5-minute zone, and then the 1-to-1 would have been 1-to-1 would have been okay, whatever, right here, and then we would have got out the trade. It would have kicked us out the trade. We either go to the stop loss or to the TP. We try not to get out too early. We also could have aimed for the resistance. And then again, if you just feel like price is going to really take it up there, we could aim for up there. But that's pretty dramatic. That's pretty drastic. A 1-to-1 is always good. So let's see if we have any other examples within this. So let's delete this. Let's delete that. Let's try to look for a 5-minute zone. Okay, cool. So price broke, came back, broke again, right? So we have a high right here. This candle broke it. So let's create our zone. This is the zone. And you see this candle invalidated us. So this would have took us out because this is telling us this demand zone isn't, I mean, yes, it played out, but it invalidated. So that wouldn't have count. But on the 15, it probably would have looked a lot cleaner because it just seems like that's how this day is looking like. This is looking more of like a higher time frame type of move. So if we went on the 15, let's see. This was the previous high. This was the candle that broke the structure. So this would have been the zone on the 15. Again, candle still invalidated. So nope, not even clean on the 15. Cool. Let's keep looking. So price will still be playing out. We have a new high, which is here. Whoops. This is the new high. So now we need a candle to break the structure. It would have been this little skinny candle right here. So now we have a new zone, which is this purple one because it's the opposite color. We would wait for the candle to tap. This candle came in, tapped, pushed out. This candle came, tapped. So let's get so we can enter our trade. So let's say it tapped and it pushed out. Let's say we even waited and we got in when this candle closed. This candle closed. Our stop loss would be the low of the previous candle. We would have been in drawdown just a little bit. It probably would have gave us a little heart attack, but not too much. Then it continued higher. We hit our 1-to-1 and we would be out the trade. We would be out the trade. Whoops. This would have been a conservative 5-minute demand zone trend. I meant trade. So we would have got in at the close of this candle, the open of this candle. This candle closed here. This next candle opened here. And we got our 1-to-1. Is that a 1-to-1? This not even a 1-to-1. So this would be a 1-to-1. And that's it. It's really that simple. Let's say we wanted to get in aggressive, right? We got the tap. We would have got in at the tap. Stop loss would have been the zone. We would have aimed for a 1-to-1, basically right here. We could have aimed for a, what else? Oh, it's all the way up there, and we're not even there yet. But let's say if you wanted to hold this trade longer, you could aim for this resistance area. That would be a 1-to-6. So it looks like it's heating up for it, but again, we trade what we see, not what we think. So yeah. And then if we wanted to see what a safe entry would have looked like, let me move this. A safe entry, so we got the tap, we got the close, then we got the push above that. No. So again, it would be, we got the tap, then it closed, this candle opened, then closed, this candle opened, finally pushed above this previous high. We would have gotten right here. Stop loss would have been this previous candle. 1-to-1 would have been here. So would have won. So yeah, that is supply and demand. That is also ICC. I could show you the ICC way. I could show you the same trade using ICC. So let's do that. Because again, I said it's the same strategy, just different terminology. So ICC. All right, so the first thing you want to look for is the indication. Second thing you want to look for is the correction. Third thing you want to look for is the continuation. Right? So this is the ICC process. So we know price has been pushing up, right? We need an indication. Let's start here. We need an indication. Yeah, because market opened right here. So let's start here. We need an indication that price wants to continue higher than this, right? So we have our high, right? So we're waiting. Price finally pushed higher. Once price pushed higher, that was our indication that price wants to continue higher. Now we have to wait for the correction. So price pushed higher out of this zone. Came back, corrected itself with this candle, pushed out with this same candle, and continued higher. That one happened quick. So this one kind of was an aggressive trader. You could have got in conservative and safe. I showed you how, but for the most part, this was pretty aggressive. And then it continued higher. So you got the indication with this candle that it wanted to push higher. It corrected itself and then continued higher. And then it happened again. Got the indication right here. Let me delete this one. So let's look at this high, right? Let's look at this high. This candle broke. This was the new zone. But look at this. It never came back and touched that zone. Never came back and touched that zone. So there would be we would not have been able to enter that trade. And that happens. And that's okay. Let's keep looking. This is heating up in real time. This is heating up in real time. So I kind of want to see if we can catch this, and then that will be it for this video. But it's really that simple. Let's see. So we got a high here. We got some highs here too. So let's identify. Trend. I'm sorry. Hold on. We need price to push above here. I feel like it's already heating up though. Let's see. Let's see how I would catch this in real time. All right. So, but let me go back. So we got a high here. This high broke. This was a zone. Cool. Came back, tapped the zone. Would have got in at the candle close with momentum coming out. Would have got in right here. And then this would have been the stop loss. And could have aimed for that and still been in profit. But it's still heating up. So let's see. If we missed that, what else could we have caught? So then price broke this high with this candle, came out of this zone. So this is our most recent zone. This candle right here. Price has not invalidated the zone. It came down, but it didn't invalidate. So this is still a good zone. This is still a good zone, and it's heating up. So if we wanted to, we could get in this trade because we're getting that close outside of the zone. So I would go ahead and get in. Honestly, it looks good to me. This could play out either way. So let's see how it plays out. We're in the trade. That was a conservative. That was a, well, it's more safe, honestly, because the tap was all the way down here. It tapped again, closed up here. Yeah, we're in. Let's see how this plays out. This is more of a safe entry. One, because we got in pretty late, but it's still heating up. It's still at the zone. So that's really good. That is really good. That's what we like to see. We want to get in close to the zone as possible. So this is a good example. Now let's wait to play out. It's been heating up too. Another thing that people trade is chart patterns, but I won't get into that. At least not in this video. All right, so I'm going to show you how to enter the future trade that we're about to do. So we're doing MNQ. We want to paper trade this. Now, I use the Turbo Trader because it's just easier to control. So I want to do, let's say, 2 contracts. Could I even do 2 contracts? I don't even know. And I think price is going to go up, so I press buy. Now we wait. We're in there, 2 contracts. Okay, so we are starting to get some momentum coming out of this zone. It did come back. We got in over here. It did come back, tap the zone again. I was thinking about coming out, but I said, you know what? I really believe this is going to go up because we haven't had any candles close inside this zone since we got in. It came back, it tapped. So I put in one more position. So I have 3 positions. And now it's just a matter of getting that 1-to-1. So let's see if this is this the momentum that's going to get us to our 1-to-1? Because we've been sitting for a good 5, 10, 15, 20, 25, 30, 35, 40, 45, 50 minutes. So let's see. We already broke the highs, so now it's just a matter of letting it play out. Because it hasn't closed out in the zone, I really don't want it to come back down here. This is about a 1-to-1 with this stop loss. This is basically a 1-to-1. Hold on. Let's see. Please, come on. Where is it? We got it right here. Oh yeah, we already hit our 1-to-1. I could really take some positions out. With this stop loss, this would have been our 1-to-1. So how I would remove a position is I want to remove one, so I sell it. Now we only have 2 positions left. Right here would be a 1-to-2. What would be a 1-to-2? That would have almost been a 1-to-2. For all this sitting, let's try to hit a 1-to-3. Let's see. Let's see. I really think he can get up here, but this momentum, I'm not really liking it. But it is 1:30, so market close in about 3 hours, 2.5 hours. All right, price is slowly approaching our 1-to-2. So I'm gonna remove another contract once it hits the 1-to-2, and then we'll have one more contract left, and that will be the runner, and we'll just see how far the runner takes us. Honestly, we already secured our other profits, so I'm about to secure some profit. I do not want to see sellers. So only have one more contract in here. So I am out of the market. I got out once this candle closed. I don't want to see any sellers come back. I already secured a 1-to-2. I was still in profit for the 1-to-3. I just don't care to come back all the way down here just to go higher. But that's literally it. As you can see, it hit here. I did walk away from the computer for a second, so I wasn't able to get out when it hit. But yeah, that's the trade. This was a longer one. So I really hope that helps. Let me know if you have any questions.